Stock market basics for beginners. Start investing with confidence. Are you interested in investing but unsure where to start? The stock market can seem overwhelming for beginners, like this massive, complicated beast that only Wall Street guys in fancy suits understand. But let me tell you, that's just not true. You don't need a finance degree or millions in the bank to get started. In today's video, we're going to break down stock market basics into simple, easy-to-understand pieces. I'm going to share practical tips that help me go from a clueless beginner to confidently investing and building my own portfolio. Okay, so what exactly is the stock market? Imagine a giant marketplace, but instead of selling clothes or groceries, they're selling pieces of companies. These pieces are called stocks or shares. When you buy a share of a company, you become a part owner, even if it's a tiny part. Think about a company like Apple. They have millions of shares available on the stock market. You buy a few of those shares, boom, you're now a part owner of Apple. Now the stock market is all about supply and demand. When more people want to buy a stock, the price goes up. When more people want to sell, the price goes down. The goal? To buy low and sell high. You want to buy those Apple shares before everyone else realizes how awesome their next iPhone will be, and then potentially sell them later when the price is higher. Here's a golden rule. Never invest more than you can afford to lose. Think of it like this. Don't put all your eggs in one basket, especially when you're first starting out. Instead, start small and focus on building a diversified portfolio. What does that mean? It means don't put all your money into one single stock. Remember that company Apple? Don't put all your money there, even if you think they're about to invent teleportation. Instead, spread your investments across different companies, different industries, maybe even different types of assets like real estate or bonds. This is called diversification, and it's your secret weapon against risk. If one investment goes south, you have others to cushion the blow. Look, I get it, research can seem boring, like reading a textbook, but trust me, it's the key to making smart investment decisions. Before you buy any stock, take some time to understand the company behind it. What do they actually do? How profitable are they? Who are their competitors? Check out their earnings reports, read about their leadership team, and try to understand their position in the market. Think of it like buying a car. You wouldn't just buy the first one you see, right? You'd research different models, compare prices, read reviews. Investing is the same way. The more you know, the better equipped you are to make smart decisions with your money. Chapter 4. Tech to the rescue. Investing apps and tools. Gone are the days of calling a broker on a clunky phone to make trades. Technology has revolutionized investing, and there are tons of fantastic apps and platforms out there, especially for beginners. These platforms can be total game changers. Many of them offer low fees, intuitive interfaces, and even built-in research tools. Some platforms will even let you practice with virtual money before you invest a single real dollar. It's like a video game for your portfolio. Chapter 5. Play the long game. Patience is key. Now here's the truth bomb, investing is not about getting rich quick. It's a marathon, not a sprint. Forget those get-rich-quick schemes you see online. Those are usually scams designed to take your money, not grow it. Real wealth is built over time, through smart, consistent investments. The stock market has historically trended upwards over the long term. Does that mean there won't be dips and crashes along the way? Absolutely not. But over time, the market tends to recover and grow. So don't panic when the market takes a tumble, it's a natural part of the cycle. Instead of trying to time the market, focus on time in the market. Chapter 6. Don't let emotions rule your portfolio. Here's the thing about the stock market, it's emotional. One day it's up, the next day it's down, and it can feel like a roller coaster ride. It's easy to get caught up in the hype, to make impulsive decisions based on fear or greed. But here's the secret, don't. Don't let your emotions make your investment decisions for you. This is where having a plan comes in handy. Remember that research you did? That long-term strategy you crafted? Stick to it. When the market takes a dive, resist the urge to panic sell everything. Remember, downturns are a natural part of the cycle. In fact, they can even present opportunities to buy stocks at a discount. The key is to stay calm, stick to your plan, and make rational decisions based on your research and your goals. Outro. Start investing with confidence. Starting your stock market journey can be exciting and rewarding. Remember, research, patience, and smart strategies are your keys to success. Don't let the world of investing intimidate you. With a little knowledge and the right approach, anyone can learn to invest confidently. Remember, you don't need to be a financial expert to start. Begin with what you know, invest in what you understand, and gradually expand your knowledge and portfolio. Ready to take your first step? Start small and grow with confidence.